Good morning, ladies and gentlemen. This is Clueless 8. This is 7:42 a.m. New York time. I am recording a live video cast of the E-mini futures, which is a proxy for the US financial markets. And you can clearly see here history in the making. We have dropped thousands of points in a matter of days, and it continues. We are right now on a straight free fall. Futures are down close to 60 points, 58, 1913, and I can assure you that it is going to get a bit worse. You have to review my video cast that I put through this morning to get an idea of where we're going. The first logical step would be the lows of October 15th, 2014, and that's around 1800. So we got roughly about another 100 points, which translates to about another 800 points on the Dow, which might seem just crazy, but you know what? Stuff happens. So enjoy this screen that you're looking at, and I'm just going to show you. Let me see on the weekly if it's, yeah, the weeklies are also showing the real-time picture. So let me go back a little bit more, and the line that's drawn here is the line from the lows of 2009 right here. And one second, there you go. 2009, the massive financial crisis, and the oops, I'm being an idiot. This is actually October 2011, when we were at around 1062 or so, and I have a Fibonacci retracement drawn here, and this is the retracement. So we are right now at 78.6% Fib retracement, and you know what? The standard retracement, to be honest with you, of course, this is on a weekly basis, multi-year. But the way things are going, the standard retracement is basically the 50% retracement level. That's around 1600. And, do I think we're going to drop another 300 or 24 S&P points or E-minis, roughly about 2500 Dow points right away? I don't think so, but what the heck do I know? Let me just show you this line here, which is 1800, which looks more like a logical move where we're going, which is October 2014. So that's it. This is the 200-week moving average here at 1700, and that's where we are. So enjoy the view. Let's see. It looks like at this point they probably have circuit breakers triggering on the New York Stock Exchange, and we're probably going to, at this point, when the market is probably going to have a delayed opening or whatever they're going to do to stem the just massive meltdown that's happening in Europe right now. Started in China, and I'm just going to draw this line. And let's see if we can get here. I don't know even if we have a chance to short the market at right away, because if they, do a if they stop the market for, the New York Stock Exchange triggers, then obviously, they won't be trading for a short while. I don't know if it's half an hour or an hour or something like that. So there we are. There we are. Just trying to extend the line here. Make it bright red. There we go. It's pretty unprecedented, but which is what you know is a black swan. I jokingly called it the black Peking duck, burnt Peking duck, but started in China, so that's just the way it is. So Russell 2000. I don't know even if it's trading. Let me see. 1121. Yep. Sometimes, the dailies and weeklies don't populate on the overnight screens. I mean, on the pre-market screens, I meant. I still remember this 1040 level. Made some real decent money off those lows in October, so let's see if we can do it this time. Stochastics oversold, but open. That means it's going to continue to go down. It's not going to be like a V-shaped type of move till we get towards these levels. McClellan oscillators at minus 150. Like to see towards minus 200 to have extreme oversold conditions. Oil 39 went to 38.69, 39.02. Let me go back in oil. Wow. This was the bottom in the market with oil and with the US financial markets back in 2009. Right there. So that was around 34. Just stops triggered, force margin sellouts can take us there. This is the Dow Jones Industrial Futures, Dow Jones Industrial Average Futures, the YMs. Let me draw the trend lines. This is all in real time, by the way. Okay, we broke the multi-year uptrend at this point. So it looks like we're heading towards the 200-week moving average, going back to 2009. So that's around 15,278. That's roughly around another 600 points. A little bit more than 600, another 650 points. SPYs, that's where we are. Okay, those are live too, so that's good. So 191.11. Oh, see on the daily, the SPYs are not showing the real-time moves, but on the 4-hour they are. You can see here. There you go. On the SPYs. See if the VIX populates. The screen VIX does not look like it's really showing. The VIX should be well past 35 right now. Let's see what the historical. Well, this is the historical high on the VIX. Somebody asked me, how high can the VIX go? Sorry. So the VIX was at 48 back in August of 2011. So this is where we closed on Friday. Back to the E-minis. Let's look to see what's happening on the stochastics here. We are starting to see a turn. Interesting, huh? Right there. But then, you could have this little dead cat bounce, gets up to about 20. Right now, the RSI is at 5.4. You can see that moving here. So quick double bottom, then a big move up. So I think that's going to be the case. If we get a real sharp rebound, a couple hundred points, let's say, not necessarily this morning, I don't know, whenever it happens over the next 24 to 48 hours, then we're going to get up here and then fail, do a double bottom. And the second one would be the really good one to buy. So, and again, buy means that it can be 5 minutes, 20 minutes, half an hour, a day. Don't expect like a multi-week rally here. This is a damaged goods here. And, it's a blunt trauma. When a car crashes, so it's not like, passengers are still alive but, they're not just going to get up and start running and driving. Notice how the 78.6% Fibonacci retracement is engaged here, and that's where it's bouncing a little bit. Let me go back all the way. Okay, so if I do the E-minis from 2009, just trying to get a handle on this thing here in real time, and do this, I would say that would be a good bet. Something like this. So we are looking at, the slippage from, this makes sense actually. So let's take it on the E-mini side. Let's say we hold this. Okay. So on the E-mini side, if you look at it this way, you have this is October lows, right? These are the October lows, October 2014, I mean. So gets here, could be a possible slippage right there. So on the E-minis, if some, as traders should track this, I've been talking about it for years now and months. 1766 would be engagement with the massive multi-year uptrend line. Give or take, or somewhere here to probably 1722. Okay, the first level of defense is 1810 or so on the E-minis, and then a slippage down towards these levels. That's possible. Let's look to see what's happening here. There's a multi-year lows, okay, on the stochastic. So look at that. Those are the highs of 2007. Look at the dates up here. Okay, 2007. And look at that, 50%. Okay, let me go back here on the fibs. There you go. So engagement is around 1820, which is a 78% retracement that I just showed you on the Dow futures that have already are occurring right now. And on the E-minis, on the S&P, so you're looking at, down here, October lows. Makes sense. 78% retracement. Fibonacci stuff is extremely powerful in determining these type of massive moves on the upside or downside.